Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday, the 5th of May, 2025, just after 6:40 p.m. Central Time. You know, I spent the day reading a lot, and for every bull article I'm reading, I'm finding bear articles. I'm reading the battle that is going on. Was this market the rally, 9-day rally, which ended today with most of the indices lower? Was that what's going to come, even more of it? Or was this sort of an exhaustion that the market had after breaking down and it'll come back and take out the lows? I'm reading a lot of really bright people that I respect, different sides of the market, bull and bear. Very interesting. All right, what do we have tomorrow going for us? Well, what you have is the March trade balance data, and they're looking for $10 billion more than they had in the month of February. Redbook Group sales is coming out. They're looking for that to show it's been running about 6.5% increase, which is stellar performance. We'll see if people are still buying now that the tariff numbers are starting to hit. API is going to release their weekly member stockpiles, and that'll come out at 3:30, and it's the first day of the FOMC meeting. So as we take a look at what the markets did today, you can see this tonight, the stock market following through a little bit to the downside. Energies are trying to stabilize after having a big down day due to the fact that OPEC is now increasing production until members of OPEC get into line. So we'll see what happens with that. In the grain markets, it was a pretty big down day as well. So you've got to keep your eye on that. You know, one of the things that happens is when energy prices fall hard, grain sometimes follows suit. You'll say, well, why? You ever hear of the word ethanol? Yeah. And if prices get too low, it's costly to make ethanol. The production cost of all in it gets expensive. So things you got to always think about, relationships in the market. Gold market still acting alive, did correct from 3,500 to 32, giving you a bounce in that range, getting right back into about the center of that. So let's take a look at the S&P. On a weekly chart, this is still a market with downside bias. It hasn't been able to get back to the 18-week average. It stayed under it. I define bias by where price is in relation to that 18-week average of closes. The second thing I look at is on the daily chart. Well, the dailies have had one heck of a run. They are nowhere near their all-time highs. They've spent a lot of power coming back here. I get it. You see it. The April 7th low was the low on this chart. The pattern has been consistent with higher lows, higher highs, and that began, as you can see, right at the end of April. Now when we take a look, where could it go? Well, in terms of just moving averages, it's the 100-day and the 200-day averages that are the resistance points. So where's the Bollinger Band? The Bollinger Band is still at 57.72. That's over 100 points higher from where the market is, and you have an embedded reading. So I am not prepared to say that the market can't get there. It most certainly can. If the red line, the K line of the slow stochastic, closes under 80, in other words, under 79 is the number I go with, then I think this will be where the market peaks itself out near term and gets a correction going. How big? Don't know at this point. Why guess that? At this point, you have upside bias in a bullish market. In the NASDAQ, it's the same picture. You got a heck of a lot closer to that Bollinger Band, but you didn't hit it, so you don't get to take home that Cupid doll. Boy, I used to love to go there with the young girls and throw the balls and do all that and hope I'd win something. I rarely did. Then we get to the mini Dow Jones. Higher lows, higher highs, and as you could see, are you embedded? So let's take a look. Did this finally turn the corner here? The close of business Monday, both numbers were over 80. Both were over 80 on Friday. Ta-da! They were not that way the day before. So you need to prove tomorrow that you have a strong day. If not, you won't embed. Right now, even with this market giving you this action of down 3, you are embedding. That's not enough to stop it. In the Russell, embedded, came up, and it's the first one to ring the bell. For me, it got up to that Bollinger Band area. We can go back 2 days and just take a look at it together. Take a look right here. So here's the 2230, and the Bollinger Band was 2030, what was that? 2039.20. I believe that's the number. And we got to 2034.20. You're pretty darn close. You got 5 points away. You know, that's kissing that area. You backed off. I'd like to see it hit it. It doesn't have to. It got pretty close. Again, in all these indices, if you get a close in the slow stochastics under 79, by the red line closing under it, you've made, in my opinion, then a good shot that we've got our first trade top after this correction. In the DAX, is it going to reach up all the way for the Bollinger Band? It could, as far as I'm concerned. This length of a rally is very dangerous. It begs a correction. I am not bearish. It begs a correction, though. When we look at the 10-year notes, you went right up last week, hit the Bollinger Band. Tell me the number it returned to. The line in the sand, the 18-day average of closes. You got under it now in the 2-year note, and we'll see what the Fed does. The market strongly, I don't know an analyst that isn't saying, very frankly, they expect the Fed to stay pat and not really say too much. What can they say? The ISM today came out strong. So the services index jumping again on you. And employment on Friday, the jobs report was strong. And the Fed should cut off of that? I don't think that's going to happen. In the dollar index, you've married yourself into the 18-day average of close, void of a trend. You actually have sideways action, and the Bollinger Bands are narrowing in on that very quickly, as they are in the eurocurrency, which has also run out of volatility right here. British pound happening right now. Get a close underneath, I would say 132.56, and you can open the door to get back into the 131 area maybe. In Bitcoin, this is where I think the pros stepped into the market. They will step out if the slow stochastic gets a close under 79. 80.20 is not 79. If the market starts up from here, I'm targeting, as you know, I've been saying, at the 100,000 level. We'll see if that happens. In Brent, lower highs, lower lows. Now you have a new event. This is the Gorilla Glue trade. It happens, and I named it that after that strong glue. As we all know, I don't know about you, but when I go to Home Depot, other than an industrial glue, I'll pick up and buy the Gorilla Glue. Well, it's because it's so strong. Although Flex Glue, they say they're stronger. I don't know. I'm not going to stand under that piece they want to drop on your head. As you can see in the market, you're oversold. You're riding the band. This could be the first step to embedding. And if it embeds, maybe 55 is the number you could go to here. So you got to keep your eye on that. The same is happening with the WTI. It could drop from this 55 level maybe into the 51, 52 level. In other words, there could be another 500 points in this market. Rebob gasoline went down, challenged the lower Bollinger Band today, and you're getting a bit of a bounce. The president is talking $1.98 gasoline. I loved it. I went looking for $1.98. Right here where you see $1.98 gasoline, do me a favor. He must have found some very obscure spot. Chicago does not have $1.98 gas. I've asked around. I don't know anyone that's seeing that price, but he said it's there. Natural gas got up to the 100-day average. The combination here of the 100, the upper Bollinger Band, very interesting. A lot of resistance. The market's used a lot of power to get up there. You know that the U.S. is talking using natural gas and agriculture as two very big products that they want foreigners to buy. So you've got to take this all into account. The Japanese came at the president and asked him, are you going to take off tariffs on us? And he actually said no. He said the 10% is staying. It's the other tariffs that you have to work with. And it's interesting. Why did they think he was going to take them off? What have they done to entice him to do so? And I hate to say this, but again, we had another day where the president's telling us how close we are to deals. Have you seen any deals so far? It's the boy who cried wolf. After a while, you don't believe these guys. And that's not a good thing. I think they should stop talking about it. And they said, you'll see a deal soon, and just let it at that. Every time they say, we should have one. Didn't Lutnick say a week ago, we should have one by the end of the weekend? I was listening to him. That didn't come. The premier who was supposed to, I guess, let it go in his parliament, whoever they are, they didn't do it. And now I'm hearing that there's more talk and coming. Let's see the deals. And as I said, I have a strong doubt it's not a deal. I think they're going to be memorandums of understanding. In any case, it's better than where we're at, right? You might want to take a look. Through tomorrow, we still have our stock index report there. I cover the S&P in great detail. I take you from weekly charts all through daily charts, adding a lot of different studies on them, stuff you really don't see here. A lot of commentary, by the way. I show you the points of the bullishness in the market for the summertime, if it's going to hold up. If it's going to hold up. A lot depends on the tariff talk, as you can imagine. Then we go into the seasonal studies, the price count studies, where they're at. I present you with all that for you to make a decision. Where do you think we're at? So go do that. There's an icon up here. If you give that a click, it'll take you to the link as well. I'm Ira Epstein. I'll catch up with you tomorrow in the other videos tonight. Hope you watch them. Take care.